Welcome to Top Line, the podcast for the best founders, operators, and investors in B2B tech. Every week, AJ Bruno, Asad Zaman, and me, Sam Jacobs, will break down what's important for you to know to be the most well-informed professionals in the market.
This episode is brought to you by Adio, the AI-native CRM built for the next era of companies. Connect your email, and Adio instantly builds your CRM right before your eyes with every company, every contact, and every interaction you've ever had enriched and organized. With Adio, you can build AI-powered automations and use its research agents to tackle complex operational processes like finding key decision makers and triaging incoming leads. Join industry leaders like Flatfile, Replicate, Modal, and more. Head to adio.com/topline and you'll get 15% off your first year. That's attio.com/topline.
Hey, everybody. It's Topline. Topline 110. It is our 110th episode. It's me, Sam Jacobs, CEO of Pavilion, Asad Zaman, CEO of Sales Talent Agency, and AJ Bruno, CEO of QuotaPath. And today we are joined by a very special guest. Michael Walrath is the chairman and CEO of Yext. And let me tell you a little bit about Michael. In addition to running Yext for a very long time, he co-founded WGI Group to provide growth capital to early and expansion stage startups in enterprise software, consumer internet, and digital media. Previously, he was the co-founder and chairman of Moat, which was acquired by Oracle in April 2017. In 2003, he founded Right Media, the world's first open exchange for digital advertising. He served as chairman and CEO of the company until its acquisition by Yahoo in July 2007. At Yahoo, he was responsible for the operation of the global advertising marketplaces organization. Mike, welcome to Topline. We're excited to have you.
Hey guys, thanks for having me. It's great to be here.
We're excited to have you. Go ahead, Asad. Kick us off.
I just want to say, Michael has great skin for somebody who's seen so many ups and downs in the market.
Hey, that's a nice way to call me old.
That Southport.
I think there's a video. I'm almost sure there's a video filter on here too.
I will concur with Asad. You look great.
Oh, you guys are kind.
Guys, how's
Don't
everybody
be nice
doing?
to me just because I'm the guest. Like, I listen to you guys. You're not that nice to each other. And I'll feel more comfortable if
these are public-facing personas right now.
Wait
private.
till you leave before we start saying things about you.
When I listen to you guys, I think about, so I'm like notoriously kind of crazy about golf, and I take these golf trips with my high school and college friends, and we're so mean to each other on the trips, and it's the only way we can show affection to each other.
It's our love language.
And so, yeah, when I listen to you guys talk about, tech and everything else, I feel like I'm on a non-golf golf trip with my mean high school and college friends.
All we're doing is projecting our inner emotions and feelings about the market and how great everything is. It's wonderful. Asad, quick, I have a quick thing for you. I need you to Venmo $1.56. Okay.
I don't use Venmo though.
Okay, that's fine. Because $1.56, if you multiply it by the number of seconds in the year, that's a 50 million ARR business right now. Send me $1.56 and I can go broadcast it to the world that I'm a $50 million business.
He's just upset at these companies that are just flying.
They're flying, but they are misrepresenting their growth.
30 million ARR in 14 days.
45 days.
45 days.
That's not what ARR. They haven't had a cohort renewal. We don't even know what it is. Anyway, we're talking about this Gen Spark AI, Mike, but we should be talking about Yext. So that's what
we can talk about whatever you guys want.
Well, Asad, kick us off.
Well, I want to talk about search. And I think before we want to talk about the state of search and where things are going. But before we do that, I want to frame Google today for people, because I think we all understand that Google's this behemoth in search and that search is super important, but the size and scale sometimes gets just ignored. And it's fascinating. I was looking at these numbers this morning. So in 1999, there were 1 billion Google searches per year. Today, there are 5 trillion Google searches per year. In practical terms, there's about 13.7 billion searches per day, as if every human on earth was doing 2 searches that day. Every year, Google is answering more queries than there are stars in our galaxy by multiples. Google search and ads account for about 57% of their 350 billion in revenue, probably 80-90% of their profit. That would make it the 50th largest economy in the world by GDP. And 50% of all website visits originate from an organic search, and search drives 8 times more traffic to websites than all other social media based traffic combined. So that's the scale of this thing that we're discussing. And because of this is a way for companies to drive attention and demand for their businesses. And for a while, it's been one of the most stable businesses in the world, but because of AI, there's a question mark there. What's the future of search? There are now alternatives to Google, very compelling alternatives that makes one really wonder, what's the future of search going to look like? What's the future of Google going to look like? And you have this perfect seat to have opinions on this, Michael. So based on what you're seeing, how do you think of the world today? And I guess more importantly, what's your view of what's to come from here on out?
Yeah, starting with a small question, right?
Yeah, easy ones.
That's really good. Think about the number of stars in our galaxy. Go.
Yeah, just start easy.
Yeah.
What's your favorite color, or what's the entire future of the largest economy in digital media? So I have this other lens on this, right? So where we sit today, we're constantly talking to our customers. We have 3,000 customers, primarily large enterprise customers. And then through our partner channel, we have a huge number of SMBs who all use our products and services. And every one of our products and services, from listings and pages and reviews and social media, and they're all about digital presence and creating this digital presence that for the last 15 years has been all about visibility in Google. But I would go back even further, right? So like quick story. So when I sold Right Media to Yahoo in 2007, it was 3 weeks after Google bought DoubleClick. It was at the same time that Microsoft was buying Aquantive, and basically the rule had always been that the big platforms the big players can't own the platforms. So DoubleClick had to be independent, Right Media had to be independent, Aquantive had to be independent, and that all got blown up when H&F said, "Hey, highest bidder gets it," and Google was the highest bidder. Now that's not really relevant to the search discussion, but what is that after a little time at Yahoo running the advertising business, so I went there to do my purgatory, and they asked me, okay, you're going to run this display business. And then eventually they said, we want you to run all the advertising marketplaces, which really meant oversee kind of how we were selling things and where the monetization was coming from. So circa 2009, you have Yahoo with, I'll get the numbers wrong, but about 10% market share in terms of search, right? That business, it wasn't publicly disclosed, but let's just call it was on the order of $1 to $1.5 billion a year. The search business out of Yahoo's, call it $6.5 billion of revenue at that time in 2009, with about 10% share. And so what was happening every day in that business was, if you went to Yahoo and you searched for anything, what you were going to get was an organic search results, set of organic search results that by pretty much every measure wasn't as good as what Google was going to give you. It wasn't as relevant. It wasn't as magical. But it was covered in monetization. So you'd see 2, 3, 4 sponsored links ahead, above. In some cases, there would be no organic search results above the fold, right?
Sounds like Google today.
Well, there you go. But Google then was one link, or in a lot of cases, no links, right? So the consumer experience was just magic. It gives me exactly what I'm looking for. It does it with almost no monetization load. And because of this, Yahoo had this impossible problem, which was, in order to compete with Google, not only did we have to take all the monetization off the page, but then we had to pour OpEx and CapEx into investing in a search engine that was going to be as good as Google, which there was real question about whether that was even possible. So you think about just the economic scale of that for a $6 billion company at the time. Give up, say, $1 billion of revenue, invest, say, $1 billion plus of CapEx and OpEx to try to compete with a company that consumers were just flocking to. And almost impossible decision to make. And I think for Yahoo, it was an impossible decision to make. And so what happened instead was you milk the cash cow for as long as you can, and you wind up eroding share to the point where I don't know what their share is today. 1%.
Well, then you hire. Well, you forgot you hire an ex-Googler in Marissa Mayer to try to fix it as well in there at some point.
Yeah, I was gone by then. I went through 3 CEOs in my 2.5 years there. The third one saw me out the door happily. But
it's interesting from the external, and going back to 2007, it's tough to like really think through the mindset. But Yahoo was the quote unquote little brother, little sister of Google, but I don't think anyone really thought about these problems the way you just described them at the time. Like in terms of it seems like there were real business challenges that like the writing was on the wall unless something changed at the time.
Well, it was very clear inside the organization that, competing with Google was going to be, basically an economic non-reality, right? You just couldn't. Maybe as a private company with really strong founders, you might have been able to say, hey, look, like, we're going to put it all into competing with Google on search. The game here is to get from 10% to 15 or 20%. And to, and to do that, it's going to cost us billions, right, of both expense and lost revenue. So to put it into context, like, that was a $6 billion business that had about, call it, let's say 20% of its revenue coming from search. So now fast forward, and what happened, right? Google ate everything. Why did they eat everything? Because they were magic, because it was a better consumer experience,
interesting,
more relevant, and it didn't matter. I mean, Microsoft was pouring tons and tons of money into Bing at that point, and they weren't able to take significant share either. And so, in a lot of ways, actually, I think Yahoo's strategy of just harvesting the cash, letting the share erode, actually wound up being the right strategy. There's a whole, days we could talk about all the other things that Yahoo got right and didn't get right. But I think when you put that, now you take that and you zoom forward to today, Google peaked 2 years ago at 92% share, roughly $200 billion of that is paid search. Their paid search last quarter, I think, grew 10 or 11% year over year, even as they lost some share. So there's a huge just flag, right? And somebody said it, I think AJ, you said it, like, the Google search results page today, 3 or 4 sponsored links on the top, more on the bottom, some on the side. It's the most heavily monetized page that you've ever seen. Why? Because why not? Right? Yeah. There was no sort of, oh, here's something better, I'll go over here, until the last couple of years. Right? And that's where I think this story gets so interesting, because where I believe Google sits today is they have a Yahoo type problem, only they have it at an unbelievable scale.
Interesting.
Yeah.
Right.
I mean, they have it on such a, I think, like, and we don't have to go down this road, but then you add the antitrust and everything that's kind of gone up against them in terms of what does the future really look like. And then, of course, we're going to, I'm sure, talk about AI and powering what that looks like, because I've switched completely over to OpenAI for my default search on both my phone and my computer and desktop. And I think Asad and Sam, you guys have probably, Asad, do you find yourself more going to ChatGPT?
It's been my default for months now. First, Perplexity was, and I just actually canceled Perplexity, and I'm just mainly using ChatGPT, but it is the primary. And a lot of people that I talk to, that's the case. Now, we are in tech and we're probably early adopters, and there's a whole world that is still doing things the way they were done before. But you can see that now there's an alternative, and the alternative is compelling, and people are thinking about it, and it's a great user experience and all of these things. But then as an operator, we just stopped our last advertising campaign on Google. And Google paid ads used to be 20% of our business, 25% of our business. SEO was 20-25%. We now spend $0 in advertising, and SEO is there. SEO is still working well. But we don't advertise there anymore because we looked at our ad spend from the start of the year till today, and we had converted $0 in revenue from that entire ad spend. And it was going downhill, and then it's just like, it's done. And so it makes us all wonder that the demand you would generate from Google, how do you generate that demand on a ChatGPT? Like, as this world changes, how do we allocate capital differently to drive demand is a really big question these days.
Yeah, I think you're hitting the nail on the head. And this is the thing that brands are concerned about, all brands, right? Yeah. I think in our world, it's particularly geared towards local oriented brands. And by local, all I mean is that there's a focus on, I have a store, I have an agent, I have a service area business, I have something that's going to have a local lens on it, because I think this is one of the areas that Google, they ate everything, right? You go back to 2009 and Yelp was like 65% of all reviews. Now it's a tiny fraction of that, and it all went to Google. It all the value accrued to Google. By the way, one of the few areas where I still default to Google is in map searches. So if I'm looking for something very specifically local, ChatGPT, Grok, they're all catching up, but they're not quite there yet. It's not integrated into my driving directions, which is Bluetoothed into my car or whatever, or built into my Tesla screen. So I do think they still have a real advantage on the local side of things. But even that, you can just assume that, with the money being poured into competing, that these other applications are going to catch up.
Michael,
do you think OpenAI or the other LLMs are going to? I mean, there's no reason why an AI can't also have sponsored recommendations and just clarify that, hey, here's our answer, but related to the answer, Walmart paid to be here, and Best Buy paid to be here. So I feel, are your customers at Yext thinking about how to redeploy marketing spend in some way towards AI? Or I guess there's a couple different approaches to it, right? So one is like you try to force ChatGPT or OpenAI to like accept sponsored advertising in some way. And then the other is to optimize and sort of reimagine how you design your web properties so that they are indexable by agents more easily. And I think there's some format, some new protocol that, that Tomas Tunguz was talking about that makes it easy to be discoverable by agents and digestible. Do you hear that from your customers that that's what they're asking for?
Yeah. So I'm probably MCP or model context protocol you're talking about. Like,
exactly.
I think that's one. I think there are going to be other ways that we work towards a world where, everything that we think about first from a marketing standpoint is how are the agents going to digest this? And the way I think about this to make it sort of real for folks is, if I am in my office in New York City and I want Mediterranean for lunch, right? The Google way, the old way, the traditional way of me is, I know I can go to Google Maps. I know I can do a search like Mediterranean near me, and I know I can find something, right? And then I can click the link and I can order online, or I can go to DoorDash, or I can go to Uber Eats and I can have it delivered, right? And that whole process takes me, 5 minutes, 7 minutes, whatever, 10 if I really want to do some research and find out what kind of like oil they're cooking the chicken in. But and by the way, that's the magic we've been talking, right? This is the magic of the last 15 years is that process, like I started working in New York in 1999, and, your fax machine would receive menus every day, right? Like that, like you guys are all younger than I am, but like there was a time in the late 90s where, restaurants would get fax numbers and they would just fax over like daily menus, right? And you'd go to the fax machine at 11 o'clock in the morning, and there'd be like 10 menus there, and you'd look at it and you'd pick up the phone and you'd call one of these places and you place an order.
And you have your drawer in your apartment full of like Chinese menus and like all the menus they
totally.
set up.
Totally. Yeah. And God forbid, if you really got desperate, you'd pick up a Yellow Pages, right? So now we're really going back. But I think that so what was the magical experience, this integration of local data, product information, delivery service, and things like that allows us to take 5 to 10 minutes out of our day and get what we want for lunch delivered to the office. It becomes like, that's not magic anymore. That's just the way we live. But magic is the fact that I have an admin, right? She knows everything about me. She knows what my allergies are. She knows what I like, what I don't like. I can quite literally walk by her desk and say, hey, can you grab something Mediterranean for lunch? That's the whole conversation we need to have, because what she has is memory, right? She knows that I want her to find a place that doesn't use seed oils to cook because they make me feel like crap, right? That I want her to find, this, whatever it is, if I'm gluten free or I'm allergic to nuts or whatever it is, like she has all that memory. This next version of the digital discovery process is going to be geared around memory in a lot of ways, right? And we're going to tell these agents so much about us so that experience goes from being 10-minute magic to 10-second magic, right? And we're going to then tie them into our buying behaviors. They're going to have our credit cards. They're going to have our accounts. They're going to have our DoorDash and Uber accounts. And all of this is coming. And what it means, to bring it back to the question, is as a business, you've got to be in a position where you are very specifically making all of your business's content, which is really just data, accessible to the agents of the human population who consume your product.
So this is the big confusion, right? Because I hear agents and I'm like, makes a lot of sense. We'll have millions of agents running around doing things on our behalf. And it creates this new version of the web where you have agents just kind of going around getting stuff done. And then I think back to maybe even a few quarters ago, and I say, oh, half my business used to come through SEO and SEM. I know how to win in SEO.
Yep.
I knew how to win in SEM, right?
Yep.
I knew what to do. It was fairly simple at that point. I have no idea how to make up that 50% in this agent world. I don't know how to get indexed on ChatGPT. I don't even think they know how to I don't think they know the SEO equivalent of it, right? Yet maybe they have some inkling, but there's no real I don't know where to go to find out how do I make sure that I show up each time somebody is searching for a problem that I solve. And their sponsorship's not there yet. So till that comes up, I need to figure out how to spend this money and that is really anxiety inducing for operators, for marketers. Marketers are under tons of pressure right now, and they're feeling very anxious because the one thing that felt predictable to them was this performance marketing. And now this is gone too. And it's like, now what do we do?
Yeah. And what happens if my competitors figure that out before I do? So I think there's, it's kind of the analog here is if I got really, really good at SEO in 2003 and 2004 and 2005, I had probably as a large brand, I had probably a durable 5 to 10 year advantage over my competition, right? In terms of customer acquisition. So you have fear, right? You have both greed and fear here. I need to figure this out because I need to be discoverable. When the question is, hey, where's the best Mediterranean food within range of my office at 61 9th Avenue, and I don't like seed oils and I'm allergic to gluten, if you're not the answer to that question on ChatGPT and Perplexity and Grok, you're losing, right? Mm-hmm. And so but nobody knows how to do that today.
Well, I just think it got to a point where you had restaurants named Thai Near Me, and so that's the level that we got to at this point. And when we're talking about hyperlocal or brands at this level being able to control their narrative, it definitely feels like there's going to be a massive change of the guard, so to speak, in terms of that 2003 feeling where if these companies and organizations are going to get really, really good at being able to control that narrative at an LLM level, but then the technology is going to continue to change. So it's just going to be this constant change of here's
That's
how we control it.
What you're saying is it's making me question you knew that you needed a website, and we kind of knew what the websites need to look like. Do we need a website? I'm going through a rebrand. I'm spending 6 figures on a rebrand right now, and every week I'm like, am I just burning money because in 9 to 12 months the website we'll need will be this very technical thing that is just there for agents and it doesn't really matter? Or you have 2 websites, you have the agent website, and there's just so many questions.
This episode's really just free consulting for Asad to figure out his
we're gonna get this. I might send a bill. ARR, more ARR. So let me. That's a really interesting road to go down, right? So I'll use a real example. So if you take Wendy's.com, right? the website of a brand like Wendy's.com, and you think about what it is, right? It's tons of photos, pictures of all the food. It's, store locators, it's nutritional information. It's just this unbelievable sort of mass of like really heavy images, navigation, drop down menus. Maybe it has some search on it, and then it's got all these like sort of layers and layers and layers of depth, right? That to render that website is like, it's just a huge amount of data, right? Which means that today, well, actually, I want to connect this back to the whole notion of like, are these things LLMs or are they something different, right? But I'll just start with this. If you take all the data in that website and you put it into a structured data text file, it's probably 25 to 50 kilobytes, right? So you're talking about like, just huge amounts of data versus effectively nothing, right? Yeah. So now like switch gears for a second and think about like, what are these agents that we're talking about, right? Like we think of them as LLMs because the foundation models that make them work and make them talk to us and allow us to create these really complicated queries, right? Questions is the, the fact that they can understand and put language into context and then deliver the answer. But what sits behind all that when you start to get to a Perplexity or a Search GPT is some form of a search index. And what that search index actually is a really heavy effort by somebody to index the data of the web and create accessible structured information, right? And so that's why,
Michael,
people are always
clarify, is that the LLM or is that in the context of the search feature within a ChatGPT? If I click search, is that when it's indexed, whereas the LLM is different, or is that the LLM?
No, I think the way I, and this will be an oversimplification, and my, brilliant head of data science will get me later. And he's like, hey, that's not exactly right. But like, I'll get it close enough for like that, like my mom will understand it. Maybe. So there's the natural language interface, right? Which is simply, I can ask you a really detailed question. Going on a vacation, I want to go to a place that's warm. I have 2 pets. I have children with nut allergies, and we like tennis and kayaking, right? Where should I go, right? Like you don't ask that query. You don't ask that type of question to Google, but you can absolutely ask that type of question to the large language model, partly because they can contextualize and understand that question really effectively, which by the way, so can Google, but they can answer you. And this is the magic of the LLM. They can answer you in a way that's both, it may be inaccurate, but it's at least comprehensive and recognizable to you as language that makes sense, right? Behind that sits, people talk about RAG, or they talk about the grounding layer. They talk about what in effect, it is for most of these kind of, melding of LLMs and search is some form of a search index, right? That effectively says, of all the things that I might choose, and I'm going to wrap it in this natural language answer, there is a core set of data here, which is like, this is the hotel that we're going to recommend, or the 3 hotels that we're going to recommend to you in the Caribbean that have tennis and kayaking, that are pet friendly and cater to people with nut allergies, right? Just made it up. And today, I mean, we all know what's behind Gemini, right? It's Google Search Index. There's an assumption that Bing is sort of the grounding layer, or the kind of engine behind Search GPT, but I'm not even sure anybody knows. And so you can kind of look at these things and say, and they're not exposing to you what the index is, but what it is, and is in some ways is this middleware layer that says, I've taken the really heavy, really hard to parse, internet, and I've turned it into an index of structured information that I can easily access to answer this question. And I think that's where we sit today. And the reason why we know that's true is because if you do a search on Google, and let's say it's a local search, and you get the local pack, well, first you're going to get the ads, right? Then you're going to get the local pack, the 3 with the map, which is where every local marketer wants to be, because that's where you earn your traffic. And then below that, what you're going to have are effectively citations. So you're going to have the pieces of information that confirm for Google that the information that you've provided through your listing, through your Google profile is accurate. And what's funny is if you do a lot of these local searches, you'll see things that you would consider to be somewhat irrelevant. So you'll see MapQuest is always popping up there, right? Mm-hmm. and TripAdvisor and Yelp. And these are the citations that Google is using to say, okay, the information you gave me is actually being replicated out across the rest of the web accurately. And so I can trust that information, right? That's like a core tenet of our business. And we can get into why some don't think that's important, but the data says that it is.
I mean, I guess that goes back to the original pieces of what made Google search work in the first place, which is like backlinks and credibility. It's just taking it to, just applying it to a different use case in this instance. But actually, so like Michael, on that point, in going down that path of for Yext, and like you kind of started to talk to this, like where do you see, like where are you headed with Yext and what you're seeing, and given all of this backstory and where the world's going?
First of all, I appreciate that you're going to like let me pitch the product.
You get a plug.
Jenna, my team will be very happy if you give me an opportunity to pitch the product. But before I do that, quickly, the alternative, so the best way to understand where Google's prioritizing information from today is look at the listing, the organic results below any local listing, and you'll see what are in effect citations. AI makes it, these AI models or these AI search experiences make it even easier because they literally provide you with the list of citations at the bottom. Guess what? It's all the same stuff.
Same thing,
right? Yeah. It's your web page, it's Yelp, it's TripAdvisor, it's those things. And so like, the unalarming way to think of this is like, hey, everything you're doing for SEO for Google is actually going to work for AI. And like we might be living in this sort of very short moment of time where that's true. But I absolutely don't expect that.
The format I was talking about was LLMS .text, which is just like it's a like you said, it's a text version of easily identifiable by the agent. I don't think SEO is going anywhere, and that's why I think continuing to invest in SEO makes sense. I would be interested in your reaction to the idea that dollars need to find a home somewhere, and if Asad's not going to be spending on Google, then maybe this redounds to the benefit of Meta, because you still have to advertise. You still need some kind of paid advertising, whatever you call it. And so then if I don't trust that people are actually using Google and clicking on sponsored links, and I'm not sure that I don't even know how to game an OpenAI or an LLM index, then I guess I got to go to Facebook, Instagram, and maybe LinkedIn. Like I got to go somewhere else. I got to spend that money somewhere. I still need customers. Yes, it's not performance. It's not such direct response that like it'll be basically display advertising versus like direct response advertising to the search, but it's got to go somewhere.
Yeah, I guess where I would, just for the sake of keeping it interesting, where I might debate that a little bit is that there are other ways to spend that money besides paid advertising. Right. So in a world where, and this goes to the ideal opening you gave me to sort of plug some of the work that we're doing. So and again, I'm going to put a local spin on this because it's always easier for us to talk this way. But if I'm a pizza place, right, and what I want is people to find me when they're looking for pizza, right? I might have whatever spin I might have on it. Maybe I specialize in gluten-free pizza or whatever it is. So I want to win those queries, right? Whether those questions are being asked on Google or on the AI search engines. What I need to understand is before I buy anything is what's happening, outside of the world of paid, right? This is the whole SEO versus SEM landscape, right? And what I want to do is I want to make sure that I'm getting as much free benefit, quote, free unpaid benefit as I can before I start paying. The best way for me to understand that is to know why are each of these different things ranking me the way that they are? Why am I getting X visibility? Maybe I'm ranking third, maybe I'm ranking fifth, consistently for best pizza near me, or for much more, comprehensive AI queries. But that's not enough just to know where you rank. You need to know what is it that's causing me to be there, and how am I lining up?
It's really hard for B2B businesses to know, I think. Much harder than a local business, right? Like if you're a sales commission software company like AJ's.
For argument's sake, a sales commission software, and adaptable.
adaptable.
And adaptable.
Very adaptable.
Yeah.
Extremely adaptable.
You thought you were pitching next. We're actually pitching
No,
towards
yeah.
back on this.
You guys want to take a turn and pitch?
This is all
pitch a
for
little bit?
protocol.
Yeah.
But when AJ does it, it's a little bit harder than when you're the pizza place doing it, right? To actually know, like, why did I show up over here? Because I was talking to my SEO firm, and they want me to believe that they write these. Every month, they send me this list of like blog posts that they've written, and then they want to dump them on some websites that I've never heard of. And for some reason, I pop up in the rankings because of that. Now, we rank number 1, number 2, number 3 in a lot of the places we want to rank: New York sales recruitment, Chicago, like. So something's working, but I look at it, I'm like, this is a pretty bad blog, and this website it's going on, I don't think anyone grows there. And is this why it's working? Like, it's hard for me to like even latch onto that.
Well, and I think that's why, whether it's local or whether it's, what you really want is you want in-depth competitive intelligence around why you are or not ranking relative to your competition. Right. So whether it's the pizza place or, 8,000 Allstate agents or, your, sort of local business, in a perfect world, what you would see is dozens or hundreds of non-performance metrics about your business compared to your direct competitors side by side. So this is hard to imagine because it's never actually been possible at this level before.
Are you a B2B tech CRO, VP of Sales, or VP of Revenue Operations? Join over 200 of your peers at CRO Summit 2025, a one-day executive-only event designed to help you tackle the challenges of today and position you for growth tomorrow. Hosted at the Denver Art Museum, this summit combines cutting-edge insights and actionable strategies. Learn from industry pioneers covering all aspects of sales and revenue growth into 2026 with sessions from Andrea Kayal of Help Scout, Guy Rubin of Ebsta, Wendy Sturgis of Cleverbridge, and more. Visit joinpavilion.com/CRO-summit to secure your spot today.
For example,
this is what you're building, or have
yeah.
built?
So this is our newest product. It's called Scout. It's a super intelligence layer for local business. So it's in effect, and think of it as an army of AI agents that are out there gathering competitive intelligence on every location of your business at the sidewalk level, right? So you could take the location filter off and you could say, look, if location doesn't matter to me, then I can just take the sidewalk level filter off. But these are the types of things that I want to understand. So I'm ranking in 3rd position, right? I want to see, and there are lots of things I understand about. I know how many reviews I have. I know what my review rating is. I know how many photographs I've posted to my Google profile. I know how often I post social media. I know that, and there's lots of other really interesting things to know, like how many, perfect replications of my data exist out there, which is in effect citations. Some really interesting ones are like, how many words are on my pages? How's the schema markup of my pages? How fast does my page load? Now that all that information is objectively interesting, but where it gets really, really interesting is when I can line it up side by side with the exact same metrics for my competitors and start looking at things like, okay, the one who's ranking first is getting 7 new reviews per month, right? I'm only getting 2, right? The one who's ranking first is getting 12 new photos a month. I'm only getting 5. I'm only adding 5, right? The one who's ranking first has a faster page with more content. And, oh, look at this. They just created intent pages around whatever buying behavior it is, right? So, well, look at that pizza place over there just created a keto menu, a keto pizza with a keto menu and a vegan menu. So anytime the question is about, hey, I want pizza, but I'm a vegan, right? You now have content, also known as data, that's available. What's so exciting about this world is that you're going to be able to, today for our customers, we're collecting like 150 non-performance metrics across search, traditional search, and AI search that lets you look side by side at your competitors. And so not only can you see where your opportunities are to improve, but you can also see maybe you're sitting in that first spot, but like these guys are just pumping out content over here, right? And they're moving up.
Is what I'm trying to do over here. So is the game that I need to win a competitive battle. So basically, if I'm trying to gain this attention from whatever version of SEO is going to exist in the future, it is in the context of my competition. So for Sam, it'll be other communities. For AJ, it'll be other sales commission softwares, maybe other incentive planning companies in the future when AJ does that. Go-to-market recruitment for me. So I'm going to look at my competitors. I'm going to look at myself and be like, okay, this is how I attack them and take their position. That's
or how they're attacking me.
Yeah.
Right. So you can't sit pretty in that top spot, because if someone else is, you need to see that they're coming up, and you need to see how they're doing it. And you need to see,
but then in our ecosystem, everyone says you shouldn't worry about competition. You shouldn't worry about competitors. AJ believes this. AJ is big on not caring about competitors. And so this world seems like a very competitive world now.
It's just, you have to be alert when the attacks come from Asad.
I mean, they just roll off me. They always have.
I'm like numb to it.
I don't even know. Anyway, Michael, how are you doing?
I don't know. I miss him. And the attack. I'm not sure I saw the attack there, but I'm missing context. Help me with context.
There's a thing in this ecosystem of ours where you have people from, I think, previous platform shifts that have built great things then when it was a less competitive world. And maybe they didn't care about competitors that much, or maybe they did and it just sounds good to say this. But the thing that they like putting out is you shouldn't worry about competitors. You should play your own game. Put your head down, focus on your business, build the best product you can build, and you will build a great generational company that way. And my premise is that's just not the world we exist in. You have to look at your competitors. You're not trying to copy them, but not being aware of them and not trying to win against them is bananas.
Maybe we could put this in context of some things that we've been talking about that Michael actually shot us a note and it resonated well. Is like the last 5 years have been really, really challenging. And previously, I started my software career in 2007. So yeah, I went through the financial recession, but even then I was still selling. And so you had 2012 to 2019 for my first company, just in like, we cared a lot about competitors, but that's because we knew how to execute and we knew what we were doing would work. And the last 5 years, it feels like every year we don't know if we know what we're doing is going to work or not work. And we as CEOs, as operators, are always having to take a step back. We're like, it's not just competitors, it's the market, it's our teams, it's the people, it's AI, and it's all this confluence of things. So maybe like zooming out a little bit and maybe shifting gears a little bit. I know it's part of the thing that you're really, it resonates well with you, is like this piece, this topic, how are you communicating to your team and to what you're seeing in the market, and how are you just generally feeling about the tech world in 2025?
No, I think it's a great topic, and you guys were talking about this. I was listening to it while I worked out this morning, and it resonates like crazy, because I think we've had this unbelievable run, right? Whether you can either go back to about 2004, maybe 2005, or you can arguably go back to about 2010. So those are the last two times when you could, I think, make an argument before 2020, late 21, early 22, where tech as an industry was really challenged, right? So it was the dot-com blow up in 1999, which is when I started working in tech. So I lived through that. It was really fun. 9 rounds of layoffs in my first 18 months working at DoubleClick.
Wow. Holy cow.
Yeah, it was pretty amazing.
That's wild.
And it was basically like, it was just over, right? I was protected because I was a seller and I made my number. And so I just, it was amazing for me because it was business school and I could just.
Because everybody thinks of DoubleClick as this amazing, obviously it was one of the most important acquisitions Google's ever made and legendary company, but you forget how hard it must have been in that moment.
Yeah, I think the stock when the day I joined was $225, and within 12 months it was like $7. Yeah, something like that, right? So I was absolutely sure when I joined, because the stock went up $20 every day. I was like, I'm gonna, be a millionaire on these, 2,000 stock options I got, and it was down 95%. And by the way, we have a bunch of stocks now that are down 95% since 2021. But AJ mentioned it, like the financial crisis didn't really touch us as much in tech. Like there was a blip and but it wasn't hard like it's hard today. And so from, let's just call it like 2010 to 2022, it may be the greatest easy money, easy growth bull run that has ever existed. certainly in our lifetimes, right? I was talking to an investor of ours the other day, and he said, he said, I'm old enough to remember when like a 25%, a company at a $500 million or $1 billion of revenue growing 25% was like an unbelievable outlier. It was like you hope to get one or two of those in your career as an investor. What's that?
They're Walking Dead now. They're losers.
They're losers, right? And we lived through this at Yext. So in 2018 or 2019, we grew 34%. Public company, we were trading for 14 times revenue, and like it could only go up, right? And between 2019 and 2022, that growth rate went from 34% to 0, right? And there's a whole bunch of reasons for that. First was, there was some product market fit issues with some of our new products. Maybe that was the second. The first was we sold primarily to retail and hospitality, and there was a pandemic. So it's hard to sell software that's designed to get people to walk into your store when all your stores are closed. And so we've kind of been living with this environment since, let's call it like, early 2020 as a company. And I think in some ways that's going to turn out to be a huge advantage for us, because we had to come to terms with the fact that like growth wasn't going to be easy and that there had to be other ways to create value. I think, what we're seeing now is the rest of the market coming to terms with that. We're seeing that. Do
you think that it would be an advantage for you because your view of the future is that it's going to be choppy as well? Like the next 5, 6, 7 years are going to be up and down and quite choppy. And so 5 years of navigating it, we have better muscles developed for this type of environment than those who've navigated it for two years, let's say.
I think so. Yeah. And I also think that there's a capitulation curve with this stuff, right? So what we did in 2020 and 2021 and 2022 was we massively invested in growth that we couldn't get. And so this is the perfect storm, and a lot of software companies are going through this now. I think at some point there, maybe it was in 21, Yext peaked out spending 71% of revenue on sales and marketing. Oof. And growth was going from 20 something to 10 something to 5 something, right? Like,
this was the CAC issue where we were just seeing this like balloon up to 30
why
plus
do you think
months.
That was happening, Michael?
I would think it was, look, I think it's easy to criticize in hindsight. And by the way, I was the chairman of the company, so it's entirely on me. But I think what we were doing was we were saying, hey, look, we have to have growth. The only thing this market's going to reward is growth. It doesn't matter how much it costs. And the way we get growth is we add sales capacity. Yeah. And like we could spend a whole hour talking about the disastrousness of those types of decisions, because here's what happens, right? We went from 100 sellers to 200 sellers as an effort to maintain that growth rate so that we could maintain our market value so that we didn't get killed for being a declining growth company, right? The next thing that happens is you realize that you're not actually getting the growth, right? But before that happens, your best sellers say, see ya, I'm out, right? I could barely make my number when there were 100 sellers, and now you have 200, right?
So my territory, you've done I have less opportunity. It's harder to sell, and there's just more internal competition. And so who leaves are your best people. Who stays are the ones who are like, the salary is pretty good, right? If I do 30% of my number, I get, I make a little bit, but like, and so again, I'm characterizing the type of sellers you want.
No,
the salary is good.
We have a company that a customer of ours that everyone on this call, everyone listening would know who they are. They went from 350 sellers in 2024 or 2023 to 20 sellers in 2024. What? Yeah. It was insane. And like, obviously
what else happened in this business? Like,
oh, but I mean, that's the whole point, is that like you read about it publicly and it talks about the shift to AI as like the way that's being messaged or narrative or why they're talking about it. And this company got a lot of PR flack for this. So just to be clear.
Okay, let me defend the move then.
Go for it. As a sales recruiting agency, please defend it right now.
I do not I don't condone this behavior, but I can understand the psychology of a founder, CEO, and a team in that moment. We have experienced growth in the past. Our product was in market for 5, 6, 7, 8, 9 years. And we were growing at these clips. We have so many signals from our customers that they like what we've built. And there's so many untapped accounts out there that we just don't have coverage on. We're going to get killed in the market if we don't have more growth. And so let's go, and made sure that we give the market the coverage that it needs for us to reignite our growth to where it needs to be. Otherwise, we're done for in this market. And that's usually the psychology of it. It's like, well, I have $200 million worth of revenue from these accounts that's telling me that people love what I built. Why don't I go and tell all these other people about the stuff that I've built that don't know us, and maybe a bunch of them will buy and will. And I think you kind of convince yourself into, we need more salespeople. Let's go hire.
What do you think,
but
Michael?
you can see how a person falls into that trap. You have so much signal there.
Yeah, if you're looking, and I think it comes back to what are you looking at, right? So like, you know, and I think during this time where it was so easy to sell, right? There was no budget pressure. There was no procurement or CFO getting involved in software deals. I mean, I came in the first day I took the March of 2022, 1 week before the first interest rate cut is when I took the CEO seat, and Yext was trading for about 1.2 times revenue at that time. And I was basically like, I mean, you can actually look at my comp package when I took over. My equity from that comp package was struck at the stock was trading about five and change. And my shares were struck at $15, $17, $19, and $21 a share. This is my hubris, right? I was like, I'm going to get this thing solved. Default is like 6 times ARR, right? Like that's just for a decent company. You get 6 times ARR. I can take all this equity as performance equity. Now I haven't invested any of that equity, and the world is quite a different place 3 years later. It's all good because it's eventually we'll pass all those numbers. But like you just get in this mode of like, the way it is the way it's going to be. Right. Yeah. And so the way it is that if I add salespeople, I can sell more. The way it is if I, you know, and by the way, like you probably would make that bargain if it's like, I have 100 sellers doing 600,000 a year on average, 200 doing 400. You probably make that bargain. The problem is
so much of my TAM that I haven't touched is a big problem,
Michael.
You have to find the right people. Have to get the right people.
I actually think this is what I've come to believe, that it's less about the right people and it's more about the right signal. So that, you know, so this is, you know, we call this the sort of sale. Maybe it's not fair, but we call this like the Salesforce mentality, which is like, not only am I going to, you know, always expand my quota carrying capacity, but I'm going to publish it, which is going to make it easier for the analyst to model growth, because all they have to do is take my so you know, there was a point where Yext was doing this, lots of companies were doing this. We're actually telling the street what our expected quota carrying capacity growth was going to be, so that they could model growth, which is a disastrous thing if the demand wasn't there to get that growth. And so we got really good at making it work on paper as an industry. But I think what we struggled with was like really understanding the top of funnel, mid funnel demand signals that would tell you that you need to actually be making this investment. That's where you got this huge inflation of, you know, sales and marketing expense as a percentage of revenue while growth rates were declining, which is the big.
But does that mean that you weren't wrong about the spend? You were just wrong about where you put it, because maybe you could have invested in top of the funnel, or was there no way to spend that much money in the first place? I like what you said, that it's about the signal. So it's sort of like, as you're building Scout, as you're building new products, it's when do we see the signal, at which point we will put the balance sheet behind it to drive growth? Yeah,
look, I think the answer is probably some of it was about the spend, and some of it was about where did you put it, right? But I also think it was about an impatience. And I think it was about, you know, we got really sick as an industry. And when I say this, I mean, as a software industry, about the value of the projection. Right. So the only way to justify the valuations of the businesses at the time, whatever, you know, particularly the high growth businesses, was to extrapolate the growth rate out to eternity. Right. And so what wound up happening was we kind of lost discipline as an industry, and we started saying, okay, like the way I'm going to prove to you that we can extrapolate this 30, 40, 50% growth rate out to eternity is by showing you that I'm willing to basically make the investment to generate that growth. And it works great until it collapses upon you. And then it is an absolute disaster, which takes you back to that question of like, why isn't it an advantage to get there sooner? So I did this crazy thing in 2022. And like, I mean, I think the company really thought I was nuts as I started talking about profitability. I started talking about
lost it.
He's completely lost it. Like
at the off his rocker.
Yeah.
What is this word?
The stock is at an all-time low. We're hitting like $4 a share. We're which I mean, we went public at 17 and peaked out at like 30, right? So this is the 90% down moment, and you're saying, okay, like, everything, all the dogma says I need to massively, and by the way, we had plenty of money, right? So we had hundreds of millions of cash on the balance sheet, and so you could run this play where you're like, we're just going to massively invest in growth because that's what the market's gonna. But you're making your problem worse unless you have really good signal at the top of the funnel. And so we did something crazy, which we started focusing on profitability, which everyone said, like, this is crazy. As soon as you focus on profitability, you're gonna, you're capitulating that the growth isn't there, and you are in effect going to be sort of marooned as a public company. Which, by the way, I think that all may have been somewhat true. The trick is to not care. Right. The trick is to say, like, I have to take this 5 or 10 year time horizon with the business. And, Yext today, is a company that has 450 million of revenue. I think we've guided to just over 100 million of, actually, I know we've guided to just over 100 million of EBITDA this year. Most of that is free cash flow. And the advantage of that.
I was looking at your financials before we got on. I mean, a 25% EBITDA business at 400 million is pretty good.
Yeah, I think it's a great business. I mean, we obviously have been buying a lot of our stock back because we think it's undervalued. I think 6 times EBITDA is cheap, personally, but
extremely cheap. I mean, private companies are getting 16 to 18 times EBITDA, at much smaller scale, but still.
But that's my point, is like, what I've had to learn. And this is my first time around as a public company CEO, as chairman. I've been involved in a lot. Yahoo was public. I've had to learn to shed most of my give a shit about what's the stock price, what's the, sort of how is the company perceived. Like, what I care about is winning in the long run. And the way we do that, and we've already shown this, is had we not become profitable and significantly profitable over the last couple of years, there's no way we could have done some of the acquisitions we did in the last couple of years. And there's no way we'd be in a position to continue to do acquisitions. And as the private market, the longer this goes on, the more sort of the broken cap tables in the private market and, even other public things start to break, the more opportunity there is for a company that has like free cash flow. So I'm one of these crazy internet, I've done the whole growth at all costs thing, and I've just turned around and become a sort of like, look, at the end of the day, every valuation of everything is about free cash flow.
It's almost like Warren Buffett knows what he's talking about.
It is. Yeah.
Let me ask you a related question. And so to the point of, you listening to, our episodes, and there's, I hear you, on like, you got to get used to not caring what the public markets say. Where's the stock price at? But there's also this morale that you have to manage within the organization. And then there's also the period, and I think that's sort of, where I'm at personally, which is, it's been a long time. It's been a couple years now of like getting, punched in the face. And so there's a period where if you have the balance sheet, it's not that you want to, grow at any cost, but there's almost a restlessness of like, what, I don't really care what signals I'm getting. I'm just sick of, treading water here. I want to start growing again. I'm going to start investing. I'm going to hire fucking salespeople. God damn it. How do you balance that? Because it's easy to say, be patient, take a 10-year view, but in the moment, sometimes you get restless.
Yeah. Look, I fight it all the time because, we did it, right? So I can tell you, because we've talked about this a lot publicly. So we did the thing that like, I should be smarter, right? So 2022 was a horrible year for software, right? I mean, it was pretty bad. And we kind of entered 23 and we said, okay, like 23, by virtue of how bad that last year was, it's got to be better, right? And guess what? It wasn't, right? If anything, it was worse, right? And then, I think what we saw, like, and this just was in the end of 23, we saw this little like light, like I pay attention a lot to what the public companies were saying because, we sort of held to a different standard and everybody was saying the same thing. Like, I'm seeing a lot of demand. It feels like the IT budgets are starting to be there. Q4 was pretty decent and the Q1 outlook looked pretty good. And so, we sort of all like lemmings did the same thing, which is, we started to expand like in Q1 of 24. We did our planning process and we started to expand our BDRs and our quota carrying reps, and we made a big investment. And by like April or May, it was like, holy shit, this is not happening. And if anything, it's gotten worse. Right. And I was like beside myself because, Sam, to your question, like, it's that, how do you, like, I did it. I was like, we're going, right. Like, this is the moment where we invest, and we're talking about, for us, for our scale, it's like incremental tens of millions of dollars. Right. And we kind of went backwards from a profitability standpoint, and we just, we felt we had the signal. And it turns out that and part of that signal was listening to everybody else talk about how it was going to get better. Right. So this group think takes over. And honestly, that sort of April, May timeframe was horrible because we're on a January quarter. So we kind of get to see the software reports in May. We don't report until June. And so you get this, there's this moment where it was just like, oh, wait a minute. Everybody sucks. Right. Like I spent February, March, and April thinking like, our business is a mess. And then the May reports came out and it was like, okay, everybody's guiding down for the year. Everybody's talking about it's not happening. And by June, it was even worse. And so, like the news was bad, but then we had to go back and we had to cut all that expense out. And it was a thing that I really felt like I, had this discipline. I had this idea about like efficient capital allocation, efficient growth, and just be patient enough to be a quarter late instead of being a quarter or two ahead. And I didn't have the discipline to do it in that moment. And it was very painful because we had to undo a bunch of what we did. And what I vowed then was I said, look, I'll always now be late, right? Like the signal I want to see is I want to see that my sellers, there's not enough for them to they're all hitting their number, right? Like the worst thing you can have in a business like this is everybody's hitting their number because it tells you you're sub-optimizing.
Is that
growth.
A signal though? Like I think about signal and I think of how it's like trying to catch smoke. Because what is the signal? My reps are really busy. What is to say that if I go after more of the market, they will be equally busy there? How can I assume I'll have the same product market fit there? Is it that my calendars are full? Great. So I'm extrapolating out that if I add 10 more people, their calendars will be full as well because the market will be responsive. And then there's the market that can just flip on its head when we decide to put tariffs on penguins and things like that. And so signal is really hard. Like, what is the signal, right? Like it's this like very smoky thing. I try to catch smoke and it could just be nothing.
It could be. Yeah. And that's why, for me, the signal, there's different signals, right? Like there's pre-qual pipe and there's qual pipe and there's closing and there's, and I get in the market, I talk to lots of customers, so I want to feel it myself also. But what I really want is I want that signal that shows me, okay, the vast majority of my reps are on plan halfway through the year. They've got plenty of qualified coverage in the second half of the year. In fact, I'm starting to hear, because the reps will tell you, your best rep will come to you and they'll say, look, I've got 20 accounts. I'm not calling on 10 of these because I can make my number plus in the top 10 of these accounts. That's to me, the most powerful signal is I can take 10 of those qualified part of our, kind of ICP accounts, and I could potentially give them to a new rep because my best rep doesn't have time to cover those accounts.
You probably can't answer this, but I get the feeling that you're generally optimistic at this point in time, just about where things are headed, more like the signaling for tech in general, or is that just I say this as someone who I am the most bullish and optimistic I've ever been about my business. However, I have other people, and I'll just say it because I'm not a public company. You have your board or your investors kind of giving you a whole bunch of other signaling and not giving you any credit for the work that you're doing. So you're kind of sitting in this middle place. Awesome, laughing at this. Other people are just making you feel like the situation is dire when you look into the business. You're like, should I not feel this way? Like, why do I feel so great? And then I have other people telling me I shouldn't be feeling this way. So it's kind of a frustrating spot to be in.
No, look, I think you asked the question, I'll answer it. I'm feeling very optimistic, but without a timeline. Right. And I think that in this timeline that we're living in, having a timeline I'm going to say what I said before again. I'd rather be a quarter or two late than ever be 2 quarters early again. And I'd rather be kicking myself saying, wow, we could have done 5 or 10% more last quarter but I just didn't have the capacity. I didn't have the marketing budget. I didn't have the onboarding teams, like whatever it is, it's more than just salespeople to execute on that. And again, this is, one of the things about being a profitable business, that you sleep really well at night, because if you are a little bit late, you can catch up fast, right? As opposed to, I can't imagine, and I was there, Right Media, we sold the business at an amazing value, but that business never made money, right? Never got close to making money. It was a loss-making business the whole time. It was super high growth and super exciting.
Is Yext the first time in your career? Sorry.
I was saying AJ's never worked at a company that made.
Yeah, I've never worked for a profitable company ever. And Asad was about to ask if, Michael, this was your first time ever working for a
is Yext the first time you've been in a business that's churned out profit?
Well, Yahoo.
No, Yahoo made a lot of money. Yahoo had a lot of free cash flow.
They just didn't know what to do with it.
It's the first scaled business, the first tech business I've ever run that makes money.
Yeah.
And I'll give you, like, I've gone the full circle, right? So like, what's weird about me is, like, I was that growth at all cost entrepreneur, and then I worked at a big company, and then I helped startups, and a lot of my dogma was their dogma. Like, look, growth is all that matters, right? When Yext was early, it was growth is all that matters. And sometimes the cure for growth is all that matters is watching the sort of the inferno of growth is all that matters, not work. But also there's just been a lot of influence along the way. And I've gotten to know a lot of entrepreneurs who run really big, profitable businesses. And there's this one book that I read periodically that, sort of changed my whole view, called The Outsiders. Not the novel, but a book that really examines, and it's a little out of date, but it's perfectly sort of relevant. It examines kind of the best the best public CEOs of all time, and what they had in common. And the punchline, spoiler alert, is it's not who you think it is. Aside from Warren Buffett, it is Warren Buffett. But it's a bunch of people who you don't know well and you haven't heard of, because what they did was, like, carefully and methodically allocate capital during, up cycles and down cycles. And there are certain traits that they all embody. And it just, it's a kind of thing that's super grounding about, like, over generations, value is value, right? And all this hype and, noise around, that 40% growth rate compounded for 10 years creates a really big value in the future. But, like, are we to believe that there's no scenario where Palantir's growth doesn't slow down? I mean, it has to compound at 30+% for the next 10 years to justify 100 times revenue.
Yeah.
I was listening to the Founders podcast. I forget which episode it was, but the guy that he was talking about was asked, "What's your exit strategy?" And the guy is like, "Death." And I was like, "Okay, these are the type of people I like."
I will say there's something too, Asad.
There's something really calming, Michael, the way you're explaining it, because I definitely hear, like, you're taking these two different worlds that converge, and it's really refreshing to hear a public CEO say there is no timeline, and you can do that because of the profitability aspect of it. So
no, I have investors who wish there was a bit more of a timeline, I'm sure, because they would probably prefer that I get out there and tell everybody that the growth is coming back next quarter or the following quarter, because that moves the stock price. But the problem is you got to live with it. A lot of our investors don't have to live with that, right? So they're happy. Okay, if it's up 25%, I'm out, right? But I'm not out if it's up 25%, right? And you talk about morale inside the company. The worst thing for morale inside the company is this whipsawing, is this up and down and back and forth. Because even though we're doing great objectively, from my point of view, like this, you have this stupid stock price every day that's telling you, like, you stink or you don't stink, which is usually more about what's going on in the macro than anything micro.
Michael, it's been awesome having you on the show. We have a few things that we do at the end of the show, but one of the things we do is shout outs and wins of the week. So anybody you want to shout out before we close, before we part?
Wow, that's pretty cool. I like that. Honestly, I would, and it's relevant to this conversation we were just having. I'd shout my whole amazing team at Yext out. like this is a business that has been through the ringer for 5 years in a lot of ways. We're 40% smaller than we were 4 years ago when you count sort of the acquisition and the headcount. And what I see is just a team that every day is accelerating and churning out. Like, the crazy thing about this thing is I'm absolutely sure that with 40% fewer people, we're doing more on a daily, weekly, and monthly basis than we were, largely because we got a lot of the waste and inefficiency out of the system, but also because it's just an awesome group. So you give me a chance, I'm going to shout out my team every time.
That's great. I love it. Asad, how about you?
I want to shout out Jordan Crawford. So for those who might not have seen, he was the last week's editorial for our newsletter was a Q&A with Jordan.
Great.
I've been going around asking people who are the top minds when it comes to the intersection of AI and go-to-market, and Jordan's name kept coming up. And so I reached out to him to ask him some of the burning questions I have about AI and go-to-market. Where does it work? What's interesting? How does it differ based on sales motion? And I've had a few conversations that have made me think for weeks after, and this was one of those conversations where I've actually started doing things in our business based on some of the ideas and the approach that he shared. And so I think it's an important Q&A for people to consume. So if you haven't, go check it out. And Jordan's the man. Go follow him on LinkedIn, and you will thank all of us for that.
I love that. It was a great newsletter. Good job.
Thank you.
AJ?
Going on this trend of shouting out my team, I'm going to shout out my director of demand gen, Travis Northup. So we've talked a lot about LLMs and search and all of the things. Our pipeline is up 40% year over year. And so seeing really good demand signals, but Travis has absolutely killed it. He started last summer, and he is a one-man show in all things demand gen. So owe it to him for feeding our team. Michael, you said your team hitting full quota attainment isn't necessarily a good thing. Yes, and it looks like we're on track for our team to all be at 100% quota attainment, but it's off the back for this quarter, but it's off the back of like really great pipeline demand from Travis. So thank you, Travis.
With a high win rate as well.
Yeah. Great job.
Yes.
I'm going to shout out STA, Sales Talent Agency. Last week we had an interim CRO start, fractional CRO, Laura Youngblom, and she's already making a big impact. We found her through STA. There's a few reasons why it's fractional, but nevertheless, she's having a huge impact in a short amount of time. And we're really excited to work with her. And, to the point of the conversation, I think there's signal. It's time to grow. That's as far as I'm concerned, but I'll take this conversation to heart and not overdo it. But Michael, thanks so much for joining us. Great job leading a great organization. We really appreciate your insights. Thanks for joining us.
Well, it was great being here. Thank you guys for a great conversation, for having me.
Thanks, Michael.
Thanks, Michael.
Thank you.
Thanks for listening to Top Line. New episodes come out every Sunday. If you like what you heard today, subscribe so you never miss an episode, leave a 5-star review, and share it with your friends. Don't forget to join our Top Line Slack channel to connect with us and discuss the topics we cover with other listeners. Click the link in the show notes. Lastly, if you're interested in joining Pavilion, you can learn more about membership at joinpavilion.com/membership. Thanks again for listening.